So it looks like this downtrend is stuck for the most part for APE. I mentioned a while back that we could probably be seeing a downtrend here since we did start to see a newer low and a lower high. For the most part, it looks like it's stuck, especially if we turn on the EMA ribbon and the Ichimoku cloud. You can see we came back to retest the cloud and it sent us further into a downtrend. We retested it yet again, further into a downtrend. And like I've mentioned in the past, the Ichimoku cloud is very powerful when it is in a trending environment. So if you haven't seen my video on how to use the Ichimoku cloud, it'll be at the end of this video. But as of right now, we're still in a downtrend according to the Ichimoku cloud as well as the EMA ribbon. You can actually see that we tested the 200 EMA quite nicely on the hourly chart. And it looks like we did get a little bit of a bounce here at the 786 level on the Fibonacci retracement, but we're currently heading back into resistance, especially with the 618 level that we broke bearish out of. Now, if we hide some of this stuff here, really the only bullish argument I can make for the most part is something like this, a triangle pattern or a bull flag. I'll go ahead and get rid of this trend line so you can see it better, as well as this one. So if we have something like a bull flag here, these usually break out bullish. The only problem though is we've only had two tests of it on the upper and lower trend line. You could argue that this was actually a fake out right here and that this is the upper trend line, which I'm just going to leave it like this for now, just in case this is actually how it plays out. But you can also see that the lower trend line only has two touches for the most part. Really, if you want to get nitty gritty with it, you could bring this up here and call this a breakout to the downside, because this would be 1, 2, 3, 4 touches. I'm generally not a huge fan of these patterns like this because they can be manipulated in different ways. So this is technically bullish, but you broke out of it. But then if it decides to make a descending channel like this, this is still technically bullish, but we're still going to move lower, if that makes sense. So it's really up to interpretation. In my opinion, this is probably what the trend line was, and we've broken bearish out of it, considering we've had more touches here than say here. On the hourly, we did manage to make a bullish engulfing candle here, as you can see with this green candle closing higher than the red candle. I'm not going to go too much on the longer time frame since there's really no price history, but if this closes above this, this could be a bullish engulfing candle as well, which could actually break this uptrend. But then again, we'll also be encountering this red box of resistance I had drawn yet again. Which you can see when we had a test of it, we broke it to the downside, we retested it, and now we're further down. So I expect that if we come up to retest it again, that we'll at least get a rejection to the 618 level on the Fibonacci retracement. If we break much below this level, we could easily see a move back down to this low again. And it really depends. If we find support here and end up making a bullish engulfing candle, we could come up to retest this red box yet again. But at that point, we need to start making higher lows so we can start a new uptrend. So in my opinion, a move back down to here is still very well on the table. If not, we're going to have to break this red box to the upside if we want to start a new uptrend. Or else we could very well retest it and then just go all the way back down to here again. This is all I have for APE today. This is not financial advice, and I'll see you in the next one.